Are you ready to try your hand at placing your very first stock trade? Then check out our free guide, 10 Steps to Choosing Your First Stock to Trade, the Ultimate Beginner's Guide. In this free download, you'll learn how to choose the right kinds of stocks and how to find them, know when to buy your stocks and when to sell them, and you'll learn how to take your very first steps to becoming a stock trader and much more. Grab your free guide now by going to TRADEway.com/guide. That's TRADEway.com/guide. Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God Himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hey guys, welcome back to the podcast. Today I want to talk about this. Can stocks be predictable? Can a movement of the stock be predicted by retail investors? Do the pros have the ability to do it? I think those are some great questions. I know that regulators don't like it if you talk about predicting the future. But here's the thing, you can't predict the future all the time, but can you predict it some of the time? Well, that's what I want to talk about today. So like I said in the last podcast where we talked about what moves the market, what drives the market, I said this: if someone asks me, can we tell the future? My answer is not all the time. All right. I'm not going to answer that yes or no. I'm just going to say not all the time. So stocks make patterns. We have to admit that. And we're going to talk about that a little bit today. You know, we've got a couple of tools, several tools that we can use to help see these patterns. One great idea is to learn how to draw support and resistance lines. Now, if you go out to TRADEway.com, I think our company is the best, not that I'm prejudiced or anything. I think it's the best at teaching you exactly how to draw those lines. I've been doing it for 40 years, and my family's done it longer than that. And it's just something, heck, maybe I'm the oldest guy out there that talks about it. If you Google it, maybe I'm the oldest guy that's been doing it the longest of anyone out there, pretty close to it probably. And so I sometimes go out and read how some of the younger folks are saying it ought to be done, and I get the impression they read like 2 books on it. Now they're the expert because they're not even drawing them right. So you got to be careful with that. But if you go out to TRADEway.com and you check out our educational programs, you're going to learn how to draw support and resistance lines exactly the right way. It's a beautiful thing. We're going to talk about that a little bit more in a minute. So we have a couple of tools that help. One, as I said, is to learn to do the support and resistance lines. Now, there's a couple of different kinds. One we would call a trend line, where it is slanted up or slanted down, like a bullish or a bearish trend. Those will have support and resistance lines. They'll always be parallel to each other. Then there's a stock we call the rolling stock, where it's just moving sideways. Those have support and resistance lines also. Now, there's another thing that's very important, and that's what I call horizontal historic price point lines. These are lines that can be drawn off of major tops or bottoms going back in history as far as 5, 10, 15, even 20 years back that still have significance in today's chart of that same stock. Now, you might say, well, that can't possibly happen. Well, it's actually one of the great proofs that charting works, that it's real. I mean, that we should be using it, is that it happens again and again and again. I'm going to give you some examples in a moment. You can go look them up if you want to. But a lot of people say charting is not real. Well, you know what? Guess who it was that brought candlestick charting to the United States? It was a man named Charles Dow. Have you heard that name? Like the Dow Index, the Dow Industrial Index, the most important thing we have on Wall Street. The man that invented it believed in charting. So when you have these naysayers that talk to you about it, just tell them that and they'll shut up, right? So charting is very important and has been for as long as it's been available to us. So Charles Dow was the first person that I can find that used charting in the United States and brought, especially candlesticks. I know that's a fact, that he's the first guy that brought that to the United States. And you can go out to TRADEway.com. If you don't know what candlesticks are, take advantage of some of our educational programs. You'll figure it out. You will be taught exactly what they are and how to use them. It's really exciting stuff. Now, if you look at any group of 10 stocks that have great fundamentals. And by the way, that's another thing we provide when you get involved with our programs is we're going to give you baskets of stocks, the right kind of stocks to be trading with, growth stocks. At any given time, those baskets will have anywhere between 50 and 100 of the best growth stocks in the world for you to be looking at. And you can just choose your stocks to trade in from those baskets. Man, that's exciting because it's really hard when you're new to even know which stock to trade. And, invariably I see that these email lists that people buy and they get a news item from somebody out there, invariably they're the wrong kind of stocks because they're nearly always picking value stocks. And you don't want to be trading with value stocks usually. You want to be trading with growth stocks. So if you go out to TRADEway.com, we're going to get you the right kind of list to be even looking at. But if you picked any 10 stocks from those great fundamental lists, it will reveal some really uncanny things are happening that you can see. So let me give you some examples. If you went out right now I know you might be listening to this way out in the future. So right now it's September 27th, and anything I show you now may not be good to even be looking at whenever you're doing this. So these will be academic examples by the time you hear this. But if you go out to a little stock called INTU, that's the ticker symbol, Intuit Inc. And if you look at the close of the price on March 18th, 2022, if you look back in time, now I've got my chart set on weekly rather than daily to do this little exercise. So set it on weekly. Go back all the way to February 19th of 2021 and draw a horizontal line from the close on 3/18/2022. It will hit the high on 2/19/2021. And if you go back and you find significant highs and lows way back in the past on a stock, it can predict where the stock may turn at the next time it hits that same horizontal line. It does it again and again and again. And it's one of the most powerful things you can do. For example, when your stock makes a turn and starts to correct and heads down, then all of a sudden you should stop trading it long enough to at least figure out what pattern it's making on the downside. Is it going to make a downtrending pattern? Is it going to bounce down off the 20-day or the 50-day moving average? You're just going to turn around and have slanted lines moving down now where the top line is resistance and the bottom line is support. You're going to learn how to draw those, and you're going to draw them. And when that stock moves up and hits resistance and bounce down a little bit, that's a good buy point for a downtrending stock. But what's interesting, when it is moving down, one thing you want to know is when is it going to stop moving down and turn and head back up? When is it going to turn bullish again? Well, the best thing you can do is go back in time, 5, 10, 20 years sometimes, and find major tops and bottoms and draw a horizontal line off the place where you are right now. As the stock's moving down, draw it back, look back in the history and see if it hits any important tops or bottoms. If it does, then you have to be careful around that little area because your stock might stop going down and turn and head back up. So if you're in a put play, you might want to take your profits when it gets to one of these key historic horizontal price point lines. So those are really wonderful tools, especially when you're trying to figure out when to stop buying, stop holding a put option because you're afraid the stock's going to turn and head back up. That's a great way to know when it might do that. All right. So with Intuit, you can look at the close on 3/18/22, go back in time to February 19, 2021. You're going to see it hits an important high right there. So that could have been a clue about what may be about to happen right now. Now, also, if you look at the same stock, INTU, and you look at the low on 5/13/22, and you go back in time, it hits highs on 8/28/20, on 9/4/20, and on 10/16/20. Now, the fact that all of those tops and bottoms hit the same horizontal line as they do in the present is quite phenomenal. It can't be by accident. There's something that's causing these things to happen. And I'll talk about that in a minute. First, let me give you another example. Let's go to Lululemon Athletics. They sell mostly female athletic clothing, and they sell some things for men too. I've actually bought things in there that I like a lot. I like this little company. But if you look at the open of this stock on 9/27/22 and you go back in time, I'm looking at a weekly stock chart, not daily, you're going to see that it hits the open of 9/25/20 it hits the open of 3/12/21, and it hits the open of 3/18/22. That's phenomenal. This historic line hits all of those major tops and bottoms. Here's another example, VRTX. That's Vertex Pharmaceutical. It made a perfect little flag pattern from 5/12/22 all the way to 9/27/22. If you look at that, that's pretty recently. And if you go to TRADEway.com and take advantage of our educational products and services, you're going to figure out how to play a strategy off those little flag patterns. It can be an option strategy or a stock strategy, but looking at that pattern and recognizing it is huge. And there's an example of one, and you'll see them all over the place. And here's another one, PXD, Pioneer Natural Reserves. It's an oil company, and it made a great trend line, an uptrend bouncing up off the 50-day moving average, really pretty, from 12/20/21 all the way to 6/14/22. And that's another great example of you could do a call option strategy where every time that thing pulls down and hits the 50-day moving average and bounces up, it's a good buy point every time. And you can see these patterns. You can even predict about how soon it will make the little flag again, and the flag or the stair step again. So these are just examples. Now, I want to take the rest of the time here to talk about how can this even happen? How can it be real? How can I depend upon it? Well, when you take advantage of our educational products, one of the first things you're going to do probably is you're going to get access to what we call step one, and it's the basics of stock trading and options trading. And step two continues it a little bit, because by the time you get through with step two, you will have covered all of the teaching that we offer on how to draw support and resistance lines properly, how to recognize patterns, what the patterns are, where the perfect buy points are in these patterns, and how to use moving averages and other indicators. And so that's pretty amazing information, and that's just two-day events. And so you can take advantage of that online in the comfort of your own home. Certainly after COVID, that happened. We have the ability to do that. We do it all the time. Works great. And we're starting to open up live trainings in different parts of the country now too. So keep your eyes open for that. But those are just some examples. Now, how does it actually work? Well, when you get into that step one, there's a section that is my favorite section to teach, and it's called Why Charting Works. Okay, so keep that in mind, because when you go to a step one, I want you to focus on that one. Really pay attention. It's fantastic. In fact, many times through the years, we'll have stockbrokers or financial managers kind of sneak into the show we're doing, and they just want to check us out, see what we're talking about. And sometimes they're kind of negative when they come, I would imagine. But a lot of times they will stay the full 2 days. They'll come up to me to break and say, "Hey, David, I'm a stockbroker. I came in just to check this out. And I want you to know I stayed for the whole thing because I've learned a lot of things I didn't know." But here's the thing. Your section on Why Charting Works is the most amazing section I've ever seen, and it's absolutely right. And I've had people say that more than once that are in the industry, that are, from Wall Street, either working as a broker or a financial advisor, different things like that. So I think it's really great. I hope you'll go out and take advantage of that sometime. Now, what it is, though, in a nutshell, is that you would have to admit this is a truth. In any given stock at any given time, there has to be one individual that controls more shares of that stock than anybody else in the world. Now, he may not own it himself. He may be managing money, for an institution like Baylor University, or he may be managing money for a mutual fund or a hedge fund. So these guys wield a lot of power because they're managing billions of dollars in some cases, and they can buy millions of shares. Now, when they buy or sell millions of shares, they're either taking those shares off the market where you don't have access to them if they're buying them, right? Or if they're selling them, they're flooding the market with shares that weren't there yesterday. So I just want you to think about the idea of supply and demand and how this could have an effect on the movement of a stock. So I've learned this. One big player like this, we call them the big boys in our training, but one big player like this, I don't think can always turn a stock from, say, an uptrend and turn it to a downtrend. But if you have 2 or 3 of them that do the same thing on the same day, it will turn the stock. And that's what's happening. And you say, well, do they call each other on the phone? They don't have to, because they draw support and resistance lines the same way we teach you to, and they're looking at them every day. So they know when that stock needs to turn. And you say, well, why would they do it? Well, think about it. Those 2 or 3 individuals are the only 3 human beings on the planet that can predict with near 100% accuracy that stock is going to turn and go the other direction at any given day. They can do that if they act together. So why wouldn't they? There's a profit motive there. And you say, well, is it legal? Well, yeah, it's legal because they don't have to call each other on the phone. They look at the resistance line. And if that stock is moving up and just about to hit it on the day that it hits it, then all 3 of those people will begin to sell stock and short stock, which is selling stock they don't even own. They'll borrow extra stock and sell that. And by flooding those millions of shares onto the market, and they weren't available yesterday, but now they are all of a sudden. Now all of a sudden we have oversupply. Well, what does supply and demand tell us will happen? If demand remains roughly the same and the supply is all of a sudden much larger, the price has to go down, and it will. Now, as that price goes down and gets close to the support line, that's the line on the bottom. You have these 2 parallel lines. The support's on the bottom, the resistance is on top, if you're trying to picture this. And as it moves down and gets to that support line, guess what they do? They cover their shorts, which means they buy back the stock that they shorted, and then they buy back the original shares they own so that they can actually own shares in the company. And now they're pulling millions of shares off the market. So they're not available to you and to me anymore. So that means the supply is much, much lower, but the demand is roughly the same. So what is the law of supply and demand that God flung out there into the universe? What does it say? The price has to go up. So these 3 individuals are causing that stock to make the patterns that it's making. That's why they're real. Now, do those people change from time to time? Yeah, sometimes they'll get out of that stock entirely. And that's when you'll have a pattern change. And in our training, we instruct you to stop trading that stock when it breaks out of a pattern, because you need to wait and see what the new pattern is going to be. It might be entirely different individuals that have different personalities, different strategies, but it will make a pattern eventually. Once it does, you can start trading it again. All right, that's a short little lesson for you on can stocks be predictable and why. I hope it's been beneficial. And if it has, would you please rate and review it so people of like mind can find it and we can be a help to them too. I hope you have a great day, and I hope you'll use these tools to your advantage.